Hello viewers, welcome to my channel. I'm Hasham Ali Khan. This is the last and final video on chapter 2, that is accounting concepts, conventions and principles. Last 3 videos I have completed the theory part. First 2 videos on explanation of accounting concepts, conventions and principle. The last video we have done the problems, that is true, on and fair and MCQs. So this video is the continuation of the last video. If you want the perfect command, if you want to come with flying colors in the examination of CA Foundation, watch all the videos till the end. Don't skip in between, don't join in between. Remember each and everything, whatever I'm explaining, that is in-depth explanation. So once if you understood the concept, if you listen the lecture with full concentration, definitely you can face the examination boldly, confidently. Now before starting the next problem, take the screenshot of the points which I have written on the board. Now, the first MCQ, multiple choice questions. 3 answers are given, 1 is correct, select the correct one. Assets are held in the business for. Why the assets are held in the business? For using it in the business, for generating the revenue. Assets are not held for resale. Goods are purchased for resale, but assets are purchased for the use in the business. The first answer, resale. No, assets are not purchased for resale. Second, conversion into cash. Assets are not purchased for converting it into cash. Earning revenue, yes, of course. For the purpose of earning revenue, assets are purchased. The correct answer is C. Right? Next one. Revenue from sale of products is generally realized in the period in which. Revenue from the sale of product is generally realized in the period in which cash is collected, or sale is made, or product is manufactured. See, cash is collected. It is not necessary that all the goods are sold on cash. Many a times goods are sold on credit also. That is also a sale. Goods are sold now, but the amount will be received in future. That is also a sale. So we can't say that sale means only cash sales. So our answer, cash is collected, is wrong. Similarly, products are manufactured. No sale will be recognized when products are manufactured. Sales are recognized when the goods are sold, whether the goods are sold for cash or the goods are sold on credit. So on sale of goods, the sale will be recognized. Next, the concept of conservatism when applied to the balance sheet results in. When we apply the concept of conservatism to the balance sheet, what will happen to the balance sheet? Understatement of assets, or overstatement of assets, or overstatement of capital. When we apply conservatism principle, that means the income and assets are not overstated. Assets are not overstated. Assets will be understated when we apply conservatism principle. That means record all possible losses, but don't record any possible gain. That is conservatism. So due to conservatism concept, the assets will be understated. Understatement of assets. A is the answer. Next, decrease in the amount of trade payable results in. Suppose the trade payables means creditors. Decrease in trade payables result in. What will happen? First, increase in cash. When we pay the cash, how the cash will increase? The cash will decrease. So first answer, increase in cash, is wrong. Second, decrease in bank overdraft account. Decrease in bank overdraft account. No. When we pay something, our overdraft, if it is there, it will increase. So decrease in overdraft is also not the correct answer. Decrease in assets. Yes, of course. When there is decrease in accounts payable, the assets will also decrease. How? The cash is paid. We pay the cash to account trade payable. By paying the cash, our cash decreases, assets decreases. The answer is decrease in assets. Next one, the determination of expenses for an accounting period is based on the principle of objectivity, materiality or matching. The determination of expenses, that means which expenses should be included during the current period. So according to matching concept, the revenue should be matched with expenses. Always the revenue of the period should be matched with the expenses of the period. So to decide which expenses to be included, it depends on the matching concept. So answer is C. Next one. Economic life of an enterprise is split. Economic life of an enterprise is split into periodic interval to measure its performance is as per entity matching or periodicity. Economic life of an asset. In the previous video, I have explained you that accounting will begin from the date when business starts and accounting ends when the business comes to an end. But the accountant cannot, the businessman cannot wait till the end of the business to close the accounts. So what they will do? The complete life of the entity will be divided into parts. Each part consists of 12 months, 1 year. Every 1 year accounts are closed to find out the result. So next day onwards, new accounts will be opened. This is according to periodicity concept or accounting period concept. So here economic life of an enterprise split is divided into periodic interval, 12 months. That is according to periodicity concept. Next one, third question, first point. If an individual asset is increased, there will be a corresponding. If an individual asset is increasing, corresponding effect what? Increase of another asset. When one asset is increasing, simultaneously another asset will not increase, because for every debit there is a corresponding credit. When we debit one asset account, we cannot debit another asset account. So this increase of another asset is wrong. Or increase of capital. When this is wrong, then or increase in capital. How the capital will increase when an asset is increasing? Right? So first is not the answer. Decrease of another asset. Yes. If one asset is increasing, the other asset may decrease. For example, amount received from debtors. When cash is received from debtors, our cash is increasing, but debtors are decreasing. So one asset increases, then another asset decreases. So here it says if an individual asset increased, so another asset decrease of another asset or increase in liability. Yes, of course. When one asset is increased, there may be a possibility of increasing of a liability. Example, stock is purchased from trade creditors. When goods are purchased on credit, goods are coming in, asset increases. We are not paying anything, we are purchasing on credit. So creditors will increase. So when asset increases, there is a possibility liability will also increase. Liability will also increase. So second is the correct answer. When one individual asset increases, there is a possibility another individual asset may decrease, or there is a possibility liability will increase. That is the effect. So B is the correct answer. No need to go for C. That's all. Now second question. Purchase of machinery for cash. When we purchase the machinery for cash, entry will be machinery account debit, cash account credit. Machinery is increasing, cash is decreasing. Both machinery and cash are the assets. One asset increases, with the same amount another asset decreases. So what will happen to the total assets? It will remain constant, no change in the total assets. So here it is saying decrease in total assets. No. When we purchase machinery for cash, there is no decrease of total assets. One asset increase, another asset decrease. Increase in total assets. No. Because the total will be nil. One asset increase, machinery increased by 5 lakh, cash decreased by 5 lakh. So nil. Then retains total assets unchanged. Exactly correct. The total of assets will remain unchanged. That's it. Now next question. This is the last question. Consider the following data pertaining to Alpha Limited. One company, Alpha Limited. The details are given. Cost of machinery on 1st April 2021, 10 lakh. And installation charges 1 lakh. A machine is purchased for 10 lakh and installation charges incurred 1 lakh. The total cost of the machinery will be 11 lakh. Now market value as on 31st March 2022 is 12 lakh. At the end of the year when accounts are closed, it is found that the market value is 12 lakh. What is the actual cost? 11 lakh. 10 lakh plus 1 lakh installation. The cost is equal to 11 lakh. Market value is equal to 12 lakh. Now, while finalizing the annual accounts, if the company values the machinery at 12 lakh, which of the following concept is violated by Alpha Limited? So, at the time of closing the accounts, preparing the financial statements, the company has taken the machinery at 12 lakh rupees. What is this 12 lakh? Market value they have taken. So, according to conservatism, we have to check, we have to compare the cost and market value. So according to cost concept, the assets should be recorded at cost. So which concept is violated here? Cost concept is violated. So according to cost concept, when asset is purchased, it should be recorded at cost. It should not be recorded at the market value. So here cost concept is violated. That's it. This is the end of this chapter, chapter number 2, accounting concepts, conventions and principles. In the next video, inshallah, I will start the next topic, that is capital and revenue expenditure. So CA Foundation students, I am putting my 100% effort in explaining each and every point in detail. So if you want to clear the examination the first attempt itself, watch all the videos from beginning till end, not once, twice. If your foundation is strong, then definitely it will be helpful for CA Inter up to CA Final also. The main thing, foundation is very, very important. So inshallah, we'll continue in the next video. If you are satisfied, give a like to the video, share my channel among your friends, give your comments, subscribe my channel if you have not yet subscribed, and buy the super thanks which is given below my video. Inshallah, we'll take up the next chapter in the next video.